What advice would you give an aspiring investor who is maybe 6 to 12 months out from getting their first deal?
Network, build relationships with people. That's ultimately what drives the business. Is you get out there, show your face, build relationships, build real relationships, be consistent. I think is a huge thing. This business has ups and downs, and there's no guarantees from one day to the next. Every day is different. Just try to go out there, be consistent, and find common ground with service people around you, with other people in the industry, where you can add value to people, and ultimately just build relationships with people.
Welcome to the Diary of an Apartment Investor podcast. I'm your host, Brian Briscoe with Four Oaks Capital. I'm very excited for today's show. It's one of our first deal series episodes, and we have Heshel Mangel on the line with us today, who recently closed on a 32-unit apartment complex in Cincinnati, Ohio for $1.5 million, and it was a B-class apartment. So, that said, Heshel, welcome to the show.
Thank you, Brian. It's good to be back.
Yeah, and this is interesting. You were one of the first people to come on the show. It's been almost a year. You were episode 19, which was a long-running number one, as far as downloads for this show. It was the first one to hit 300 downloads, first one to hit 400 downloads, and the first episode to hit 500 downloads. So, something about you is magical. So thanks a lot for being on the show again.
Yeah, absolutely. I mean, I wish I can take credit for that one, but that Joseph, who was the lead on that one, was dropping insights the entire time and absolutely gold. So yeah, credit to him.
Yeah, I mean, that was absolutely pure gold. I was taking notes. I mean, we've come a little ways ourselves since that episode recorded, but I was definitely taking notes, and I re-listened to that one a couple of times just to hear what he had said again about scaling and growing your business. But that said, let's talk a little bit more about that episode in detail. What are some key takeaways you had from that, and how did that help you?
Yeah, so some things that I took out from that talk with Joseph, and he's been so gracious with his time as well, even post that and continuing the conversation. But he definitely opened my eyes to the idea of just thinking bigger, jumping into bigger opportunities, and just open your box and open your mindset a little bit and think bigger and be able to grow bigger. The way that he scaled has been incredible. And to just really know your place, understand your strengths, and then fill the rest of the gaps with great people.
Yeah.
And both of those, I think, points, when you bring them together, really allowed me to continue to operate in that way and just continue to grow and have that mindset of continuing trying to get bigger.
Yeah. Well, one gem that I remember from it is you asked him a question about doing stuff yourself versus having other people do it. And his answer was simple. It's like, don't start. He's like, don't start doing that stuff. He's like, have somebody else do that from the beginning. And that's something that, I mean, it's been a year from that conversation, and I probably haven't listened to that episode in, about 6 months, but something that I still remember. He just said, hey, just don't start it. He's like, if it's something that you're going to offload eventually, or something that you're going to outsource eventually, and you're not good at it, don't start doing it yourself. And that's something that helped me as well. I think that was the nail in the coffin for me to actually outsource getting my podcast edited, because I was doing all that stuff myself and spending a lot of time on it. And I'm like, you know what? He's right. I shouldn't have even started this. I should have outsourced it from the beginning. But that's it. Let's talk a little bit about you, and tell us a little bit about your background and what got you into multifamily.
Sure. So my background, I'm born and bred here in Cincinnati, Ohio.
Mm-hmm.
Left at about high school age and made a couple stops around the world. Ultimately got married and settled in New York. While I was living in New York, and I was actually a teacher at the time, is when I first got my introduction into this whole space in general, and just went aggressively and trying to learn as much as I can about the industry. Did have a couple of friends that were in this industry, and just hearing from them about, the type of opportunities that it brought them and the lifestyle that it brings them really intrigued me. So just went aggressively from that point to learn as much as I can, speak to as many people as I can. Started doing a couple of smaller projects while I was still living in New York, operating in Cincinnati, which is where I'm from, and then ultimately made the move back to Cincinnati as we were able to grow it out a little bit and be able to scale a little bit better.
Nice. Yeah. And I remember when you came on the episode last time, you had accumulated, I think, 55 total units. A couple, if I remember right, a couple small multifamily and a couple larger ones. Can you tell us what your portfolio was like then and what it's like now?
Yeah, so at that point there was, if I remember correctly as well, there was a couple of single families and then 2 apartment buildings. Mm-hmm. That was the bulk of it. Since then, it's been about a year. I would say closed on 3 other properties since then, and we're getting ready to close one here in about a week
Awesome.
on another multifamily. Yeah.
Oh, wow. Congratulations. You guys have been extremely busy, and that's great. So let's talk about your why, your big burning why. I think this is an important thing because it's what drives us. So what is your big burning why?
Yeah. So the why is my family,
Mm-hmm.
the opportunities for my family. Just case in point, I was a little bit late to today's meeting, and that was
Mm-hmm.
due to taking my daughter to school today. She was feeling a little bit unwell and had to be taken to school late, and just the opportunity for me to be able to be available
Mm-hmm.
and there for my family whenever it's needed is really my why. That drives it every day, and really every decision I try to make within the business is catering to me being available to my family, and that's really what's most important. And at the
Love it.
same token is being able to have the opportunity to give and give back to organizations and issues that I believe in is really important to me as well. And when I have the opportunity to be able to give back, it's special.
Yeah. Yeah, I love that. I love that. And that aligns very closely to what my why is. I mean, I started this business 3 years ago to be able to live close to family, and I'm now in Idaho Falls, which is, close to family. So, we're about 2 blocks away from two of my wife's sisters, slightly different directions, but we're close to family. And it was something that my W-2 job I wouldn't have been able to do. And that big burning why for me had really fueled me. So being available to your kids is huge. And I know they'll thank you for it many years from now, probably not when they're teenagers, but hopefully when they're in their 30s, they'll reach back and thank you for it. But so let's talk about this particular deal itself. So 32 units, Cincinnati, and I know it's in the same metro you're in. So let's talk about how you found the deal, first of all.
So I found the deal through a broker that I built a relationship with over the last few years. He brought me a different deal
Mm-hmm.
originally that was owned by the same owner. And we decided we weren't going to pursue that opportunity. But in conversation, we realized that there was actually another property that he owned that he wasn't really interested in selling at the time. But
Mm-hmm.
we were able to continue to, stay in touch and follow up with that. And eventually we were able to come to terms and secure the contract for this property, which is one that we ultimately closed on.
Nice,
Um,
nice. Now, how long did you know this broker before he brought you that first deal?
it's been at least 2 years,
Mm-hmm.
and we always stay in touch. We're always staying in touch in terms of what opportunities are out there, and we've done a couple of projects and worked together on some other things in the past. But this is the first multifamily deal that we actually closed together. But we always staying in touch and in contact over the last couple of years.
Yeah, that's a big thing. I mean, it's nice to have a lot of brokers, and I think it's kind of hard for the newer investor to build that broker relationship. I think a lot of brokers are closed off, but basically 2 years since you knew him before you close your first big multifamily deal, and I don't think that's atypical. I think there's a lot of people who it takes a long time to build those relationships of trust, and that's something for a lot of people that's a struggle at first is to be able to get that relationship with the broker. Now, what other type of stuff did you do? I mean, you said you had other business with him. What other type of stuff did you do with him?
Well, I actually was involved with a single family deal with him as well,
Mm-hmm.
and we've done some work on a couple of rehabs.
Okay.
I'm trying to remember exactly which property it was. And there was another deal actually that we were working on, a large multifamily deal that we almost secured the contract, and then it was kind of tucked away from under us at the last minute.
Mm-hmm.
But we've definitely had cross paths and done a few different things over the last couple of years.
Okay. All right. So all good things, and I mean the fact that you had an LOI in and almost got a contract previously, he knew that you guys were serious. He knew you were ready. You had to, and in your case, you're different than people who come on the first deal because this is not your first deal, where you had a lot of experience prior to kind of gain that credibility with the broker. So broker brought you a deal, wasn't the right one for you, and you ended up, working with the broker and the owner to get another one of the owner's properties under contract.
Right.
So,
Yeah.
all right. So tell us about the property. Tell us about the business plan.
So it's 32 units. Now the bulk of the property is actually 30 units, and there's a duplex a few minutes away that was included as part of the sale. And I do want to say that although this wasn't my first deal, there are aspects of it that are the first, and there's always things that you can learn first from each deal. And I'm sure there'll be things on every deal that will be the first time for that deal. The big thing for me in this deal was it's the first time that I was securing the debt.
Mm-hmm.
With my own balance sheet, which ultimately we ran into some issues towards the end, and
Mm-hmm.
definitely some things that we learned for the future. But it's a huge step to being able to continue to scale and bring in new investors and partners
Right.
once you can capitalize on that ability.
Nice, nice. So it's a B class. It's a 30 unit. Is there renovations? Is this a value add plan? Is it a buy and hold? What's your play on this one?
Yeah, so the beauty of this property is that it was cash flowing
Hmm.
from day one, and that's what we are looking to do with our properties. We want it to be cash flowing on day one,
Hmm.
and at the same time be able to continue to add value and give a higher rate of return for our investors. And then the third metric that we look at before buying the property is that at the end of it, our entire basis with after renovations and everything we do is going to be below the actual property value. So we want to be able to have it cash flowing right away, increase the value, and be in it for less than what it's worth. And this one hits all those three boxes where it was, a very stable cash flowing property right away. We've started going in there and already making improvements both on the interiors and exteriors, adding value to the existing residents and future residents.
Yeah.
And ultimately, we'll be in it for less than what its value is.
No, I like that because the things you say, the things that you just said are things that bring good returns, but also mitigate risk. So you're looking at this from both angles. After everything's said and done, you want the basis to be lower than the property price. That's nice for two reasons. Number one, like I said, it just mitigates the risk. I mean, there's low risk there of loss of money. You buying a cash flowing asset, once again, very low risk of loss because the cash is already coming in and you're already able to cover your debt service and hopefully pay your investors back a little bit. And then the value add portion, if you do that properly and you're looking at the comps properly, that's a way where you guys can force the appreciation. And what I didn't hear you say, and I love this, is that you're banking on market appreciation. It'll probably happen, but the three things you said are entirely under your control. And so you're mitigating risk and you're able to provide solid returns. And if the market appreciates, it likely will. That's just icing on the cake. So good on that one. All right, so let's talk about the capital raise. How much did you raise for this, and how much did you contribute yourself?
Yes, we raised about $500,000. 50 of that was from myself, and
Okay.
and 450 came from our partners. And that was process of raising the capital. And thankfully, we started at a place where we already had mutual understanding and
Mm-hmm.
mutual respect for each other. And that makes it a lot easier to run a deal when you know who your partners are and everybody's comfortable working with each other. So there was no real sales pitch in terms of having to sell myself or the way that we would operate the deal, because we all had that common ground already.
Mm-hmm.
So that's really been helpful for me, and also in future deals, and the deal that we're closing now and probably for the foreseeable future, is the way I'll go about it. It's just people within my existing network, or an existing investor telling their friend or their relative, hey, I've done this deal with them, I think this is something you would be interested in, and kind of letting the deal speak for itself.
Yeah. Yeah. And that's the very important point. You had credibility with these people prior to asking them to invest. And I think, a common mistake that a lot of people make is they have the idea that if you have a good deal, the money will come. I think it's the opposite. You have to have the relationship with investors. You have to have that credibility with investors before you pitch them that good deal, or that money's not going to come. So you had fostered a relationship with people. They trusted you. And something that I also think is important is, you're putting your own money into the deal. So a $500,000 raise, you've got 10% of the total capital stack there. And you can basically say, hey, I'm investing $50,000 of my own money. Will you invest with me? And that's a lot different than, I've got a project and I want you to invest. Will you please give me some money to invest? So good. I think there's a lot of little gold nuggets there in what you said. Fostering the relationships and then being able to capitalize on the relationships you'd already built and the trust and confidence you'd already built with people.
Yeah. And I think if for someone who's listening to this and maybe thinking like, oh, I've never done a deal before, how do I build that credibility? Credibility is not only built from, I think, a previous deal that you might have done with this person or something else. You can build credibility and trust in many ways. Sometimes you can even build credibility and trust from deals that you did not do, which is
Mm-hmm.
very important. And I think that we don't see it enough of people talking about deals that they didn't do.
Mm-hmm.
And that builds trust as well when they see that you're honest in your underwriting, you're honest in your reporting, and you're explaining to people why this deal you didn't think would be a good opportunity for them to get into. That builds trust as well. And then in your everyday just relationships and the way you deal with people and the way you conduct your lifestyle, builds that trust and credibility as well. So it's not only from, oh, I've done 10 deals, look at me, trust me. Because,
Yeah.
and there are unfortunately probably people that have done 10, 20 deals that are not trustworthy. So I would say, look past just the amount of experience that you may think you have or don't have, and look for ways, really just be, honest and personable, and ultimately you'll end up building the trust.
Yeah, I think that's huge. I mean, especially for the newcomer, it's something where you can take your previous life experiences, your previous life skills, your previous life relationships, and apply them to, the multifamily, the apartment investing business. And that's something that you said very, very eloquently. You can just be a good person, be trustworthy, and that by itself is going to go a long way in being able to attract capital when it's time to do that. So
Yeah.
let's talk about closing. You mentioned earlier there were some hitches with closing. Let's talk about the closing process, some of the hitches, and how you guys overcame those.
Yeah, so the closing process was going quite smooth. And then I want to say about 3 days after closing was scheduled, we get a message from the lender like, hey, actually, we need to change some things. And that threw quite a wrench into the deal. We had quite a lot of my own personal money already locked up in the deal, and in earnest money and due diligence money and legal fees and everything else. And, they wanted to come at the end after we were meant to close and changing terms. And I don't know exactly why that occurred. The entire process was a transparent process. I think ultimately there are many different departments and levels and hierarchy within a bank structure, and things can be a little bit of broken telephone, I think, when you go up and down the totem pole.
Yeah, right.
And there's only one level that's the face of the deal, that's communicating with you as the customer, and many levels beyond that don't interface with the customer. And especially when you're dealing with a bank that's relationship based, it's important to have relationships with the people that are ultimately making the decisions.
Now, what terms did they change, and how did that affect you going forward? Were they significant enough to make you pause and say, can we still do this deal, or what type of terms did they change on this?
Yeah, there were definitely moments where there was pause of, can we still do this deal? And, I reiterated to them and really all the parties the entire time is, at the end of the day, I'm a fiduciary for my investors' money. And if it's not going to be good for them, we're going to walk away. Personally, I had money in the deal that I would have lost. But at the end of the day, they had to understand that the deal has to work for those who have financial interest in the deal, and for those that I'm representing. And if it doesn't work for them, we can't do it. And ultimately, I think they appreciated that. And we were able to continue to finagle around and negotiate both with them and the owner to get the deal done in a manner that worked for everybody. But there definitely were moments throughout it where we weren't sure if the deal was going to get done. They wanted more capital, first of all, and a reserve account. They wanted some extra contingencies, because being that this was the first deal that I was guaranteeing on my own, they decided they wanted a lot more contingencies, and I don't even know exactly what. But ultimately, we were able to come to an agreement as to how much we should put down in reserve, what other contingencies were going to be, and how we were going to kind of operate the deal going forward. And then they wanted to do another appraisal and another report and another report. So that kind of took a bit. And at that point, a lot of it was just time, because at that point we were out of contract. And the owner at that point said, like, the contract is over. He's taking the earnest money. And he's like, listen, the deal is over. If you want to get the deal back, meet me at this time in this place. We'll have a half-hour chat, and at the end of it, we'll know, are we closing or not? Let's lay it all on the table. And we did that. And he was very responsive and appreciative of me showing up and being honest with exactly what was going on. And I think that calmed him down as to our ability to close at that point. And so once we were able to get him back in, the investors had to have buy-in again, because at that point the bank had requested that those investors should give them some more information about their background as well. So we had their buy-in, and at that point, then we were able to close.
All right, nice. Yeah, so yeah, significant hitches. This basically made the deal fall out of contract. And you risked your earnest money. They call it risk capital for a reason, because it's always a risk. You've paid some money for the due diligence. You probably paid loan application fees, and obviously the earnest money, which the seller is entitled to, if you don't close. So there's obviously, lots of risk there, but end of the day, you were able to bring all parties to the table and, hey, let's get this thing done. And what I think, I mean, most sellers, and I've been, a seller a couple of times, but most sellers, they are obviously interested in getting the best price possible, but they don't want to be strung out either. And that's kind of a big thing. If you can't close in the contract period, the question that they're going to be asking themselves is, if I give them another chance, are they going to be able to close it? Because the last thing they want is to have their property tied up for an extended period of time. So sounds like you went back to the table with him. You convinced him that you're going to be able to close, and got this across the finish line.
Yeah. So, a couple of things there, and that was really well how you put it all together. But understanding there are multiple parties involved and having to keep all the pieces glued together, from the lender to the owner to the investors, there's the insurance company, the legal, title, everybody, just keeping all the people involved was super important, and being transparent with everybody about exactly what's going on was super important. And from the owner side of it, I mean, and it added another level that they were actually relying on this clothing for a 1031 that the owner was doing. So, they needed to be sure that this was going to close, because they have time frames, and they have a time that they have to keep to. So just making sure that everybody is aware of what's going on, and keeping everybody involved was key to being able to actually bring this back to closing.
All right. Well, congratulations on getting that across the finish line and negotiating the actual finish on that one. So, so let's talk about the first step after closing. You closed in April. It's June. How have things gone so far?
Yeah, I mean, thank God it's gone really well. The first thing that we do after closing is we have a questionnaire we give to all the residents. We want their feedback as to what is good, what isn't good, why they like living there, what would they want to see changed. And we let them tell us kind of what they would have wanted to see out of the property and out of the community that they live in. So obviously, as we do due diligence, we're going through and creating our own list of different improvements we want to make on the property, both interior and exterior. And then we take their list as well, and we are able to get a good idea as to both from our perspective as well as current residents and locals and what their perspective is. And thankfully, we've been able to go ahead and really implement that plan so far really well. The bulk of it has actually been so far exterior improvements, power washing, landscaping, really making the exterior, putting up a new sign, the rebranding of it, and cleaning and filling in, potholes in the driveway. Things that the residents have really been able to see that they've come in and have been able to deliver on what they have told us they were going to do, and they're listening to us. And people see, they drive by, they come by, and they see that it's being taken care of well. And then at the same time, interior improvements. So there were, if there were pressing needs from individual residents that had told us that these, they've had these issues or that issues. So those were the first things that we were able to tackle on the interiors, just fixing maintenance issues that have built up over time. And then the third part of it is then rehabbing the vacant units and improving those to be able to get higher rents.
Yeah, really nice there. And there's something I really like. You guys involved your tenants, and this is that there's something that can be said about building a community. If your tenants are involved, they're more likely to renew, and that's huge from a bottom line standpoint. I mean, number one, it helps build community. If you have tenants who've been there, they make relationships with their neighbors, and it makes them less likely to leave. And for your bottom line, I think the most expensive thing that happens operating an apartment building is when people move out. Because when people move out, you're going to spend, for number one, you're going to have an empty unit with nobody paying rent. And number two, there are going to be turn costs. You're going to go in, you're spending costs cleaning, you're going to spend costs fixing up minor things. And, if you can get the tenant to stay in for a year or sign a renewal, that saves you a lot of money and keeps money coming in as well. So involving your tenants, I think, is a smart move. I think the curb appeal goes a long way to showing the tenants that you guys are going to make, that you care about the place. You want to make it look better, and they're going to see that immediately. They're going to see that it's getting better. And once again, that makes them more likely to stay. I don't think curb appeal directly contributes to your NOI by bringing more money in, but it definitely contributes by, making people a little more likely to stay there longer. So we talked about the project, how you closed on it and what you've done since then. So the question I always like to ask everybody is, what's next for you? Where are you going from here?
Yeah, so we're continuing to try to build both, obviously, on that deal as well as another deals. As I mentioned, we are closing another deal here in about a week or two, hopefully before the end of the month. So we're continuing to look for these type of deals that meet that criteria. If it's cash flowing, there's room for value to be added, and that we can be in for less than its value. So those three are really important for the new deals that we're looking for. And really, as Joseph had told us, a year ago, we're trying to think bigger. The last couple of deals we've been in have been about this size, the 30, 35 units. And we're trying to think bigger and be able to scale bigger and look for bigger properties. Yeah, that's where we hope to be heading.
Yeah, love it. Love it. Yeah. And you got a really good base, a couple of, 20, 30 unit properties. I'm guessing your unit count right now is, triple digit, low triple digits. So being able to go to that next step, you got a very solid base to be able to push the envelope a little more. All right.
Yeah.
So what advice would you give an aspiring investor who is, maybe 6 to 12 months out from getting their first deal?
Network, build relationships with people. That's ultimately what drives the business. Is when you get out there, now you can get out there even more and meet people, show your face, build relationships, build real relationships, be consistent, I think is a huge thing. This business has ups and downs, and there's no guarantees from one day to the next. Every day is different. Just try to go out there, be consistent, and find common ground with service people around you, with other people in the industry, where you can add value to people, and ultimately just build relationships with people.
Yeah. That's solid. I mean, it's definitely a relationship business, on all aspects, from you to your investors, from you to your lender, from you to the seller, the brokers, from even the service providers, the property managers, and everybody else involved. It's a team sport, and you've got to keep that team together. So building the network, maintaining those relationships is huge. Great tip. All right. And the last question, how can listeners learn more about you?
I'm available on LinkedIn at Heshel Mangel is my handle. That's probably the best way to go about finding me.
All right. Sounds good. And we'll put a link to that in the show notes. So if anybody's interested in reaching out to him, tap the link to his LinkedIn profile. And incidentally, that's where, Heshel and I first met, was on LinkedIn. I think he responded to a post I put out, a feeler I put out, a year ago, looking for people who wanted to come on podcasts. So that said, Heshel, thank you so much for coming on the show. This was great. And it's been great catching up and seeing what you've done in the last year. So thank you very much.
Yeah, I appreciate it.